Bit of a mixed performance for the shares already today. What do you think the market will make of the news?
I think the new information is around the profit downgrade that we've seen coming through from CSR today. Now, previously in their first half result, they said they were comfortable with analyst forecasts, which ranged between $35 to $54 million, and now they're expecting underlying profit to be between $30 to $34 million. Of course, we're watching Viridian, but that was in a review already. And if we have a look at Viridian, I guess we're looking at a possible reduction in the carrying value. But since CSR has owned this particular business, we have seen the value of this business deteriorate in just over 4 years from $1 billion just to $300 million. Of course, part of that is a very difficult residential construction market that we've seen in the last few years. In fact, leverage to residential construction is really what weighs on CSR, because this makes up about 70 to 80% of its revenue. We've also seen a pretty difficult aluminium market, but so far we've seen the aluminium market actually picking up from a year ago. But totally, for the Viridian glass unit, it is expecting to see a loss before interest and tax of between $37 to $39 million. If we have a look at that Viridian glass unit, it is high operating leverage, which means when we do see pain in that residential construction space, we see a lot of pain for CSR. The float glass in particular, we see high fixed costs there, and it's not surprising to hear that Ingleburn is shutting down. And that's because Ingleburn was due for a pretty costly capital upgrade back in 2015. So not surprising that the company has decided to shut down that facility as of July this year instead. Now that should, according to our estimates, release around about $20 to $30 million in property value. But altogether, what we've seen from CSR today is a profit downgrade coming through, a potential downgrade once again of the carrying value of its Viridian glass business, and the company just saying that, you know, that residential construction still remains quite tough despite there being a few green shoots from around about a year ago. Now, this is a stock that is highly leveraged to the residential construction area, so once we do start to see activity in that area really build up, expect CSL's business to do better than the market and better than some of its peers.
Let's go into Northern Star Resources, the gold producer, with a reserve upgrade today. Market would no doubt be applauding this one.
This is a quality mid-cap gold producer, and interestingly enough, it's a little bit different from the other gold producer because it does pay a high emphasis on paying dividends rather than just capital growth. In fact, if we have a look at 2012, the payout value here was 41%, so we saw a dividend of 2.5 cents, and I think that's quite encouraging given that we have seen capital values really underperform the market as well as gold prices over the last 12 months. We have a look at Northern Star today. We've seen it join the 1 million ounce single deposit club, so that's a positive. The total resource inventory now stands at 2.2 million ounces, and that's also due to the Ashburton upgrade that we saw not too long ago. And Ashburton has the potential to be a second major mine for Northern Star, potentially producing 100,000 ounces per annum. But of course, the key project is Pawson, and that's where we've seen a resource upgrade of 38%. We've seen a reserve upgrade of 81%. Northern Star's share price in the last 3 months, though, has really been suffering quite badly. The shares are down 25% over the last 3 months. That compares to the gold price, which is down by around about 8%, and the market, which is up by 12% in that time. So the gold miners really have been suffering more than the gold price. However, on Friday, we did see gold prices rising just slightly for a second consecutive session, and this announcement by Northern Star certainly a positive one.
Julia, the shares are up by 3.3%. You've outlined a backdrop to that. Do you think it would add a bit of momentum to some of those other gold stocks, or not necessarily?
I think this is individual to Northern Star. It has to do with the assets that it holds. In terms of the other gold stocks, we have seen a bit of strength last week creeping back into those gold stocks. Although we did see a rise for the second consecutive session during Friday's New York session, we saw gold prices only up by 0.1%. Now that's a good result given that we did see the non-farm payroll numbers beating on the upside. We saw the unemployment rate in the US dropping to 7.7%, and jobs in February we saw 200,000 136,000 jobs being created. That blew estimates consensus out of the water, which was at about 170,000. Of course, one of the key things driving gold prices is the weakness that we see in the US currency and quantitative easing. One of the Fed's goals is around employment. So if we do see the job numbers continue to gain momentum and to continue to see strength, then we will see some of those gold bets being unwind, and that would be a very sign for gold.
Interesting that this market is being characterised as being a complacent one as we start the new week by David Scott from Arab Bank. Just put us through, or walk us through maybe the likely response out of China when the composite comes online today. How are you reading that market will trade?
You're absolutely right, Carson. Today is all about a tug-of-war between the very bullish numbers that we saw coming out of the US and the somewhat bearish numbers that we saw coming out of China. The numbers that came out of China on the weekend were worse than expected. Industrial production at 9.9%, retail sales at 12.3%, both coming in below expectations. So while we open with the record that we saw on the US stock market on Friday with the Dow Jones Industrial Average reaching another all-time record high, really our market's going to be keeping one close eye on China and the reaction to the raft of numbers that we saw coming out over the weekend. Already we have seen that commodity space coming under pressure. We've seen BHP Billiton down by about 0.4%. So watching the Shanghai Composite to see where the Australian market ends up today.
Julia.